Do you want to know how to own your favorite stocks and get paid to do them? Well, I'm going to show you exactly how that works and the pros and cons of it all. Now, let's dive into it. So I'm sharing my screen here, and what we're going to talk about today is, look, you can do this anywhere in the world as long as you have your phone and you have some cash, some money to actually invest in companies. Now, you know that you want to invest in these companies anyways. You're like, I want to invest in this company. I love this stock. I think it's going to go much higher. That is always the first step of the equation. You say to yourself, hey, I think it's going to go a lot higher. So let's take a look at a few stocks and let's see how we can generate money from our phone anywhere in the world in a very short amount of time and how we know our limited downside is. So, how do we generate money on our phone? All right, let's take a look. Okay, so these are the stocks that I follow, the stocks that I like. Not all of them that I like, in fact. Some are just that I follow. But we're going to take a look at a few stocks that I really like. And the first thing that you always want to do is you want to make sure that your stock is going to be worth more in the future. Now, there's no guarantee that'll happen. A war could break out, something could happen, something could change. There could be a inflationary pressure. Who knows what could happen? But what we want to know is, hey, I don't mind owning the stock at this price because I was going to buy it anyways. But if you're going to pay me a bunch of money to buy it, well, then, hey, why not? Why wouldn't I do it? So this is called a cash secured put, and it's a game changer of a strategy. You can use this strategy for the rest of your life once you fully understand it. So let's dive into what the actual strategy is. So here's my list of stocks that I like. Okay. So as you can see here, I have my watch list. And in my watch list, I have AMD, I have Amazon, I have ARM Holdings, I have ABGO, which is Broadcom, and so on and so forth. Okay. Now I say to myself, let's say, for example, I really want to buy Bitcoin. Okay. So this is the first trade we're going to do. Bitcoin, how do you actually get paid to own Bitcoin at a cheaper price? Well, let's take a look. Okay. So here it is. Bitcoin, this is not owning the physical coin itself or a cold wallet or something like that. You are buying into an ETF. This ETF is called the iShares Bitcoin ETF, as you can see in the top left-hand corner. Okay. Now, Bitcoin, I'm going to go back here. Bitcoin is currently trading roughly at $64,180, $170 now. And that's US dollars. And we say to ourselves, you know what? I think Bitcoin's gonna be worth a lot more 6 months from now, a year from now. It's very difficult to determine what something will be worth in the short run. But in the long term, it's a lot easier. So, how do you get paid a bunch of money just to buy Bitcoin? Okay, let's take a look. So, here's Bitcoin ETF. Like I said, the iShares BlackRock ETF. Okay. Now, okay, we have to set aside some money to actually buy this. Now, whenever you sell a cash secured put, well, you can make a lot of money on it. And that money, let's take a look how much it is. Okay, so we really want to buy Bitcoin. We've already established that, and we've definitely established that we want to buy some more Bitcoin. Now, this price here of $36.35 will go up or down based upon how Bitcoin does. Bitcoin today, like I said, is down a fair bit, right? So it's down about 1.17%, and this is down about 1.25%, so it's roughly in line. Okay. We really like Bitcoin at this price. Think it's going to be worth a lot more. That's always the first step, whether you're buying a company, whether you're buying Bitcoin, or whatever you're buying. Okay. So we're going to go ahead and go and take a look at this. Now, the first thing we want to take a look at is all these squiggly lines here. And these squiggly lines are all technical analysis. Now, they indicate to us that, well, Bitcoin is below its 200-day moving average. It's below its 50-day moving average. It's below all moving average. It's in a bad spot. Bitcoin peaked in value in October of last year at about 126,000. And now we're trading at 64,000. Okay, so it's been almost cut in half. Now we think maybe the worst of the damage is behind us. Now we really want to buy some. Now, how do we get paid a lot of money to buy some? So what we do is we go into the options market. Okay, we don't actually just buy this because the other choices we could say, hey, it's $36 and 35 cents to own this Bitcoin ETF, which is an exchange traded fund. It's a way for you to own a Bitcoin, say in a retirement account or in your other account without actually physically owning it. All right, so we have established that we want to own some. Okay, what do we do? Well, the first thing we do is that apart from actually buying the actual stock itself here, this ETF, we're going to go ahead and say, you know what? Let's go ahead and just simply agree to buy it. Now, just for agreeing to buy it, we're going to get paid a lot of money, and that is something that we can do over and over and over again. The worst thing that will happen to us is that we'll have to buy it. But the point is that we would have bought it anyways. And if we would have bought it anyways, why not get it at a discount? Why not get paid a bunch of money for it? Okay, so what I'm going to do here is I'm going to see these dates here at the top. I'm scrolling across. These are the dates that you can pick for when you want to actually buy this Bitcoin ETF. And we're going to go roughly 30 days out. Okay, and you can see they expire on every Friday of each month. Okay, 17th, 24th, 31st, August 7th, and August 14th. Roughly 30 days out is where we want to be. That's the sweet spot for us. Okay, so we're going to go 30 days out and we're going to agree to buy it for $36. Okay, $36. Now, what does that mean exactly? That means we're saying to the market, say, you know what? If Bitcoin goes below $36, we're more than happy to buy it. However, if it doesn't go below $36, we won't have to worry about buying it. But you see this $1.26 here per share? Well, we get paid that no matter what happens. No matter what happens, whether Bitcoin goes up, down, or sideways, or in circles. We get paid that no matter what happens. And that's a very healthy return. If you take $1.26 and you divide it by $36, that's roughly a 4% return for the month, just shy of 4%. That's a very healthy return. And again, like I said, the worst thing that'll happen is we're going to own it. Well, we would have bought it anyways for $36.33 currently. This is the way to do it if you want to be able to buy it cheaper. And hey, if you have to buy it, you have to buy it. If you don't have to buy it, you don't have to buy it. So we're going to go ahead and do this trade. So we're going to go to the order button here. And this platform, guys, by the way, is called Interactive Brokers. We have no affiliation with them whatsoever. It's just a very good, efficient platform that I've been using for about 20 years, and it works fantastic. Trades are about roughly $1 a trade, so if you're doing trades frequently, it works out pretty well. Okay, we're going to put a market order in here, and we're going to go ahead and agree to buy this Bitcoin, okay, this Bitcoin ETF. And therefore, bam, trade is done. I'm going to go back to my portfolio and see how I'm doing here. Sold Bitcoin. There we go. So what did I do here? The Bitcoin ETF is trading for $36.33. I said to the market, you know what? I'm more than happy to take this and buy it if it goes below $36. And the market says, okay, well, since you're willing to take that risk, we're going to go ahead and pay you $1.24 per share, which is, like I said, almost a 4% return for the month. Now, a couple things can happen. Either Bitcoin goes below 36, in which case I'll have to buy it, or it doesn't go below 36, in which case I don't have to worry about buying it. But that $1.24 per share, I keep no matter what happens. Now, I want to point out one fact. When you agree to buy get into the options market and you agree to buy shares of anything, whether it be Bitcoin ETF or whether it be your favorite stock, you have to do one contract at the minimum. Okay, so here you can see here, size one. One contract means 100 shares. So I'm on the hook to buy 100 shares of this Bitcoin ETF at $36. That means I have to make sure that I have $3,600 in my account. Because if I don't, what happens if it goes below and I don't have the money? Well, I got a big problem on my hands. Now, the system won't allow you to do that. It'll allow you to use something called margin. I won't get into that right now, but that's a way of leveraging yourself and get you a lot of trouble. I'll do another video on that later on. But for this sake, we're going to say we already have the $3,600 in our account. So we know between now and August 14th, we'll have to buy it or we won't have to buy it. But for that, we got paid $1.24. Now, let's do a different one and let's go a little bit closer. And you can see here, I'm going to show you the difference of how much you can get paid on this. Okay, so we're going to go back to this Bitcoin ETF, IBIT, and everything is down today. And this is mainly because of the war. And sometimes the market gives you a good opportunity like this. You know, the war is going on in the Middle East. You've got inflation going up higher, oil prices going up higher. So stocks don't react well in that environment. But if you have a longer term vision, this becomes a great way to accumulate your favorite stocks and positions at discounted prices and get paid for them. So I'm going to go ahead and do another one here. But this time I'm going to say, you know what? I'm going to go a little bit further away because I'm not sure. Maybe Bitcoin's going to go down a bit more. Okay. And I want to show you how much you can get paid just to agree to buy this. This is a big deal. Okay. If I go all the way down to $33, so that means Bitcoin would have to drop 10% between now and August 14th. Well, then, hey, I'll have to buy some. But if it doesn't, I don't have to worry about buying it, and I keep that premium. That premium here is 40 cents times 100 shares equals I get $40. And I'm on the hook for $3,300 here in this case. $33 times 100 shares. I'm on the hook for $3,300, excuse me, but I'm getting paid $40. So I'm getting paid about 1.3% roughly for the month. I'm getting paid 1.3% for the month, roughly, to buy Bitcoin, just to agree to buy it. And that too at a 10% discount. Now imagine learning the skill and understanding how to do it over and over and over again on your phone, anywhere in the world, like I said, and it doesn't take a lot of time. And it's also it's not stress free, it's less stressful. And the reason I say less stressful is because if you bought the thing for $36.33 and it goes down, well, some people get stressed out, some people don't. But if you agree to buy it for $36 and you got paid $1.24 per share, you're going to be a little bit less stressed out because you've got a bit of downside buffer. It's a way of buying yourself a bit of buffer. Now you can also use this as cash flow. Do this every month on your favorite company's cash flow. You can generate cash flow from it. In the other situation, I would decide to go here for 33. Now you can go for whatever price you want. You can be more aggressive, you can be less aggressive. That really depends on you. You can change the date around. Okay, if I go to the top here, you can change the date around. Oh, seems to be a little bit frozen here, but you can change everything around if you want. Okay, so in this situation, I agree to buy some 36s and some 33s. But if I go back to the options market here again, and this is why it's so important to learn how to sell options. Selling options is literally a game changer once you understand it. Like there's a reason I did not go beyond August 14th, right? There's a very good reason for that. And then we cover that, and we've covered that in previous videos, but I won't go beyond 14 days. Now I'm going to go here. I'm going to go 15 days. Only 15 days, okay? Now I'm going to do the same trade again here at $36. So let's wait for this to pull up here. We're going to order the trade. It's going to pull up here. Let's see how much I'm getting paid on this. Price hasn't pulled up yet. It looks like I'm getting paid 82 to 84 cents, as you can see in the top right-hand corner. So if I take 82 cents, okay, and if I divide it by 36, I'm looking at about 2.25% a month. Sorry, for 15 days. Now that's a phenomenal return. Now imagine you have a nice portfolio where you're able to do this constantly, selling cash secured puts on your favorite positions, generating crazy monthly cash flow. And the worst that happens to you is you own it because you would have bought it anyways. So I highly encourage everyone, if you want to learn how to generate additional cash flow, if you've got a busy life and you don't have a lot of time that you want to put into it, this is a great strategy to learn. So I hope you guys learned something from that, and we will cover more topics in the future. Let us know. Take care and talk soon.